welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues on the D Street, starting from the benchmark index moves to the sectoral action, as well as all the stocks that are buzzing the most in trade today. Remember, after a 9-day long continuous rally on the upside, we're seeing another week open on a rather tepid note, and this is following the weak or the disappointing IT earnings from the bellwethers TCS and further disappointment coming in from the IT pack as well. How are the benchmarks trading at this point in time? Well, you can see almost a percent cut on the Nifty right now. You will be able to see that the Nifty is trading at about 140 points lower at 17,688. Also about a 575 points of a cut can be seen on the Sensex, which has slipped below the 60,000 mark, trading at 59,865 with a cut of almost 1% out there. Talk about the broad markets as well. Is the pain remaining on the broader markets, the mid and the small cap 100 indices as well, and the sectoral indices as well. Let's see all of that chart as well. Slightly uptick for the small cap 100 index, so that's where the outperformance is coming about. It's actually looking at a complete opposite or a reversal of the trend with respect to the benchmark indices. Mid caps also trading towards the high point of the day at about 0.06% of an upside, so flat with a positive bias, but definitely on a positive zone, and they have recovered from the early morning lows as well. When you talk about the other sectors as far as the Nifty index is concerned, you will be able to find it's the IT index that's been dragging the most, especially led by stock fall that 5.5% almost of a cut for that one, although that again has recovered from the opening lows for that one. You can see Infosys still down by over double digits, 10-11% of a cut can still be seen on Infosys counter. It's 1239 at this point in time. A slew of brokerage houses downgrades have also come about, which have led to this downward sentiment on Infosys. Look at a TCS or an Tech Mahindra, for example, as well. HCL Tech, Wipro, all of them are looking at weaker sentiments following after the kind of cuts that we are seeing on the bellwethers as well. So the IT stock, barring the IT index, you're seeing the healthcare stocks also slightly declining by 0.5% in trade today. Financial services down by 0.5%. Pharma down by 0.5%. But what's looking up, the Nifty bank slightly muted with 0.2% of a cut for that one. But the stocks or the sectors that are still holding up are FMCG up by 1%, PSU banks up by 1.5%. Apart from that, you have the realty pack that's up by 0.6% as well. So a mixed reaction as far as the sectors are concerned. But definitely when you talk about the top gainers and the losers consist of the big IT names like Infi, Tech Mahindra, HCL Tech, Wipro, and also L&T. On the upside, you have some of those FMCG majors looking at kind of stemming the fall for the markets. Nestle, HUL, Britannia, all of them up in the green, supporting the top five gainers as far as the markets are concerned. And Power Grid and Adani Enterprises also looking up, closing in on that 1900 mark for Adani Enterprises. So keep that stock also in your radar. But time now to welcome our guest on the show. Rajesh Palviya joins in. He's the head of technicals and derivatives at Axis Securities. Welcome, Rajesh, and thank you so much for taking the time out. Well, all about and all the focus on the IT pack after those results have started to pour in, and the kind of reaction that we have seen in the markets right now. Now, two-pronged question. First, the reaction that you're looking at on the markets first, first and foremost, the Nifty and the Sensex. And that's after 9 days of consecutive days of one. What do you really see as the kind of reaction that we've seen? Is this just a knee-jerk reaction, maximum contribution coming in from the IT pack, or do you see some more consolidation or, at these levels for the markets going forward?
Yeah, good afternoon, Sakshi. So the reaction basically is because of IT stocks, because the negative surprise which we have seen from the Infosys result have given a knee-jerk reaction to most of the IT stock. That is the giving pressure to the benchmark index Nifty. Overall, if we analyze the market structure, both the indices are trading in bullish territory, as Nifty has already crossed 17,500, 17,550 resistance area and comfortably holding above those levels. Nifty as well as Bank Nifty both are trading now above their short-term, medium-term moving averages, which is also adding up the bullishness. So it's a reaction to the result of Infosys, and market is again post-opening. We have seen some recovery from the low point of the day, and looking at the overall setup, we believe till Nifty is holding above 17,550 level. Again, market will try to find some support buying action in the other large cap space, and market will try to recover from these levels towards 17,750, 17,800. But yes, for some time, we can expect consolidation in the range of 17,500 to 17,850. And then overall, we believe that, buy on dips kind of strategy one can deploy. Keep stop losses of 17,500 for taking your long position in index, as well as if you are buying dips in this kind of market, to keep stop loss of 17,500.
You talked about Infosys, so let us discuss a little bit more because the stock opened at 52-week low levels, dropping the most in over 3 years as well. The shares have also seen the single biggest day drop, in fact, in over 3 years after multiple downgrades have come in from the brokerage houses after Q4. Now, we do remember that in Q4, the company, posted the kind of weaker guidance and, of course, a fall in the revenues as well, a degrowth in the revenues as well. So that's been a bit of a disappointment for the street as well, much below the expectations or the consensus estimates of the streets for that one as well. Your thoughts, how do you really assess the Infi numbers? And then the double-digit fall or the reaction of 10, 11, 12% odd on an intraday level, is it in tandem with the kind of results that we have seen? Is it sharper than what we had expected? How do you really see the fall?
So it's a very sharp reaction after this numbers posted by the Infosys, and there was negativity in terms of their guidance. Market was expecting to double-digit guidance, but they're very conservative in terms of guidance, 4 to 7%. Again, they ramped down of 3, 4 projects, which is also a negative factor in this result. Even if we go with the data setup also, there was clear short build-up was there in the Infosys on the derivative side also, and the reaction in today's session also adding up of short position. So we believe that furthermore weakness we can see in Infosys from here onwards, and possibly stock can go further down from the current level also, because there is no
Do
as
you
such.
see how much downside?
So, looking at the immediate setup, we believe that this stock can go further down towards 1150, 1140. This could be the further target from the current level also. So, any pullback towards 1260, 1280 is again shorting opportunity in the stock. Until unless stock not crosses about 1350 level, it's a sell on rise kind of strategy one
Okay.
saw in Infosys. So,
You're
11.
right, because I was going to ask you this itself, Rajesh, because this is the first time that even in the commentary of the management, we've first time seen that the management has accepted that there is a problem, and the market started to punish these stocks about 6, 8 months ago as well. And we did see an entire fall in 2022, the second half, slight recovery coming in, but then there was the disappointment, and of course the global uncertainties also crept in. Are we at that turn where you buy this bad news or not, or are we in for a long winter?
So I think most of the IT stocks are struggling, and this is the second consecutive year where most of the IT stocks are in the downtrend. Even Nifty IT index has also revisited its 1 year low, which was there in January 2022. So looking at the overall scenario, the crisis which we are seeing in the Europe as well as in the US economic front, which is clearly giving a sign that one should at least 1 or 2 quarter one should avoid the IT stock, because lot many clarity needs to come in coming quarters numbers, because
Okay.
these quarter numbers are not giving any kind of sign that stability is coming back to the this on the fundamental front. So we believe another 2 quarters are very challenging for most of the IT stocks. The
Hmm.
kind of guidance, the kind of commentary which we have seen from the TCS as well as from the Infosys are still keeping us on the back foot, and we will wait. Even the price correction is already there, but still will not buy at this juncture. We'll wait for another 2 quarters. Let the results to reflect. Let the financial to be on the comfort side. Then only we will
Yeah.
initiate the
So,
buy.
what exactly would be a level at which you would say that INFI is perhaps an attractive buy? I mean, you did say that we can see a further fall from here. Below 1,200 rupees as well. You see Infosys stocks slipping to. What exactly will be a level where you would say that investors can watch out for as a buy opportunity?
So if I draw a trend line on the yearly chart, so my level comes around 1,050 or 1,100 level. So if stock comes in this range, 1,050 to 1,100 range, then one can start accumulating this stock. because still the until the fundamentals not improve, the prices will not recover.
Hmm.
So everybody is waiting for the fundamentals to improve, and on the margin front, if the company start delivering good numbers, then only the stock prices will recover. Even 1100, 1050 are the levels based on the technical, but I think the major turnaround will come based on the results outcome only.
Sure.
So if you want to buy on the price point, wait for another cut around 1150, 1100 level are the
Got it.
level you can look at to buy on the downside.
Got it. And before between both Infosys and TCS, where would your conviction lie beyond these like earnings as well? If at all you were to look for attractive levels, which stock would you really prefer to keep an eye out on?
So I would go with the TCS because still if we analyze the most of the parameter on the TCS, it is better than the Infosys as TCS is having large employee base of around 6 lakh employee, and they are still managed to deliver the margin compared to the previous margins. Still they are stable in terms of margin, though
Sure.
there is no expansion, but still margin. So it clearly shows that they are managing their show. Deal wins are still there. So there is no cut down in terms of deal wins. So we believe that if they improve in the margin front, so TCS could be the outperformer compared to the
Okay.
Infosys. So we will go with the TCS. If TCS comes near to the 3050, 3000 level, it's a good attractive level to buy and accumulate TCS for long term perspective.
Okay, between Infosys and TCS, Rajesh bets bigger on TCS. However, still there could be some more pain about a quarter or two. So keep an eye out on these stocks before seeing a complete turnaround or some signs of a recovery coming in on the results front to really aid that confidence to be continuing buy on the IT majors as well. But definitely 1050, 1100 kind of levels on Infosys would be better to look at as an opportunity to buy as well. Rajesh, be with us. Brokerage houses we all know have come out with really knives and have started to slash the kind of targets for Infosys a year ago when nobody was downgrading IT, but this is the time when we're seeing most of the brokerage firms have actually come out with a downward rating, sell recommendations coming on the stock, which are the highest since September of 2017. So, which are the brokerage houses that are revising these down, the targets for Infosys? Tanya, my colleague, has all the details right there. Tanya, take it away.
Absolutely, Sakshi. So first of all, as you rightly said, shares of Infosys took a beating in today's trading session. Now, this is after the company reported a poor set of numbers. So basically, the guidance, attrition rate, and the management commentary, all these things disappointed the Lal Street. Now, the stock hit a new 52-week low of 1,219 rupees today. It is currently down 27% from its 52-week high. So, according to the brokerages houses, the company reported a 3.2% decline in constant currency revenue, which is the worst in at least a decade. Now, some experts gave the stock a major thumbs down. Including some major downgrades and target price cuts. They believe that there are a lot of headwinds for the IT sector, including softening of growth, pressure on margins, macro uncertainty, and muted deal flow, and that will actually make the fourth quarter a difficult one for all these IT companies. In fact, according to Reliance Securities, IT services have started witnessing the impact of worsening global macros in terms of economic slowdown and cut on spending, which is expected to continue in FY24 as well.
Got that. Thanks a lot, Tanya, for all that update. Looks like the pain is going to continue for at least some more time for most of these IT majors. And you can see the target prices for Infosys have been slashed to almost 1200 by some of them as well, which is further below the kind of levels that Infosys is trading at even now, despite the 10-11% cut that we have seen today. But let's move on from the IT pack. There were bigger numbers that also came about from the other sectors, including the banking space over the weekend as well. I'm talking about HDFC Bank, Rajesh, and I wanted to understand from you, the stock is already at a 52-week high. The bank posted 20.3% year-on-year growth in consolidated net revenues that came in at 34,550 odd crore rupees during the quarter. Also, the NIIs or the difference between the interest and the interest expanded also grew by 23.7%. Your thoughts on HDFC Bank right now, although the stock has slipped by 1.5%. Your thoughts post results?
So if we we analyze HDFC Bank is in bullish territory, though there was some corrective action, also you can say some profit taking post number, but still we believe that, if stock continues to hold above 1600, 1620 level, again buying will come around those levels, because if we analyze the overall setup, stock managed to give breakout of its consolidation of almost 15 to 20 week, and the kind of breakout we are seeing on the weekly as well as on the monthly chart, it clearly suggesting us that, if stocks hold 1600, 1620 level, then possibly again stock will resume its uptrend, and on the breakout above 1720, 1730 level, we can expect a target of 1850 also on the higher side for on a positional basis. So our view is positive for HDFC Bank. This decline one can use as a buying opportunity. Your stop losses should be around 1600.
Okay, so positive view on HDFC Bank. One can look at some attractive levels to continue to buy or accumulate the stocks at these levels as well. So continuously a negative view right now on the IT space, looking at the headwinds that the sector faces, but definitely positive for the banking space that continues to even show some positive signs amid the earnings as well. We'll keep an eye out on all the movement on the earnings as well as on the market movement as well, and keep you posted with everything that's helping you or the indices move at this point in time. So do stay with us on to Business Today TV. Thanks a lot, Rajesh, for being with us on the show and discussing with us all these insights as always. Right now, the market's still trading down, 566 points of a loss for the Sensex. The Nifty hovering about 140 points lower at 0.8% of a cut for that one as well. Keep an eye out on the markets. Do stay with us. You can subscribe to our channel, and also don't forget to continue to exchange views with us and engage with us on our social media platforms: Facebook, Twitter, LinkedIn, and Instagram. Until then, many thanks for tuning in.